Academy, back at it again with another episode on Breaker Block series, right? So this is gonna be on NAS100 specifically. I did promise a market review at 10:30, but I thought about it. I was like, yo, I just what if I just do a pre-recorded video for y'all, just to go over NAS100 specifically, because me running a call only showing one pair is not really my gist. You know what I'm saying? I like to go different pairs, but in this scenario, I only really saw one particular move on Nas. I'm pretty sure the same move happened on SPX as well, where SPX mitigated the 1 hour breaker block. But we're gonna go over that on Nas 100 over here, and I do already have it pre-annotated, so let's just click it right here. Boom. So for my VIP students, for my platinum members, gold members, bundled members, the first market review on Monday, we did go over Nas 100's market structure, and now let's go in the 1 hour time frame, because this is where it's very, very, very important when we are looking at structure. Let me just mark this up really quick. 15 OB. And let me just delete this real quick. So now over here, right? I pretty much was paying attention on the 15-minute time frame, right? This low, right? Why is this low significant? Now, this low is significant because this is the last low. This is the origin of this whole swing. And why do I look at this as the origin of this whole swing? Is because this low, right? This low mitigated this 15-minute order block over here. So we all can see, clear as day, there is a 15-minute order block over here, right? And as we all can see, price mitigated the 15-minute order block. Price expanded, retraced, expanded up even more, then accumulated some more. Price came back into this 5-minute order block. If we go down to this 5-minute order block, went below this low, short-term low, inside of this, right? Basically, I'm gonna just explain this real quick. From this low and this high, if you're looking at this whole fractal, this is the most important highs in this fractal, right? Because if price goes above this high, right, and it closes on the 1 hour, so we all can see, closes way above this high, that would be a breaker structure. If price, in hypothetical scenario, if price, right, if price goes below this low right here, that would be a bearish breaker structure. But as we all can see, inside of this range, from this low to this high, this low, this low, this low, and this low, all of those lows that's inside of there is only a short-term low. So pretty much, as we all can see, right, price came below this low, basically taking out sell stop liquidity, right? And then expanding up in NFP over here, expansion, and then you get that retracement over here, and now we're reversing. But now you're gonna ask me this, yo, Yang, do you trade this type of market conditions? No, I don't. If I was trading Nas, I wouldn't really look to trade in here, right? I know someone in the mentorship group, they caught a buy over here, right? On Nas, they basically saw this trend line liquidity over here. You have a 15-minute order block coupled with an imbalance, and he used the fib as well on there. He entered here, and then he wrote it up here. But that's not, me as a mentor, I'm very transparent. That's not my type of trading. I don't really like trading inside of a range. You get what I'm saying? I like seeing breaker structures, and then after that you get the retracement. I like seeing those type of things. So when I was basically seeing this, whole fractal play out, right? Mind you guys, I don't trade NFP, but I study them. I like studying NFP. So, right? So when I saw, market open 9:30, right? August 3rd over here, and I was on a 1 hour chart. So we all can see, right? This 1 hour, this 9 a.m. candle closed above this high. So I was already thinking, right? These two highs, they're very, very, very important. If price goes above this high, that is a breaker structure, right? As we all can see, the body of this candle closed above this high. And now what's below that, right? What's below that is a 1 hour breaker block, right? Break block, pretty much after a breaker structure, you're going to get a very, very quick retracement back into a breaker block, and that is your breaker block trade, right? And this is the entry that I saw on NAS. But this is how you can confirm a breaker block. So you want to go down to the 30-minute time frame or a lower time frame. As we all can see on the 30-minute time frame, within this 1 hour breaker block, right? This is how you guys can, mix and match concepts of smart money concept together and like put them together so you have a higher probability. So if we're just looking at it like this without the imbalance, you're going to look at the breaker block right here as the entry, right? But if you go down to the 30-minute time frame, let me just get my box back. If you go down to the 30-minute time frame, the breaker block is there still, but you wouldn't really think of it like, all right, that's a 1 hour breaker block. If you haven't checked yet, you only will be seeing the 30-minute imbalance, right? 30-minute imbalance is right here. So you have two entry confirmations. On the 1 hour, you got breaker block, and in the 30-minute, you have a M30 imbalance. Okay, and now what else? What other component is there so I can enter this trade, right? The breaker structure, right? The breaker structure is a very, very nice way, for you to look at this. So let's go down to the 5-minute time frame. Matter of fact, let's go down to the 1. Let's go to 3. Okay, cool. 3, like it. This is what I was looking for. So on a 3-minute time frame, right? So with this whole rally up, right? We broke structure. What comes after a breaker structure? A retracement, right? A retracement will come after a breaker structure. And as we all can see, after the expansion all the way up here, price started retracing back where? Into this 3-minute order block over here. So what did the banks do? Breaking structure. What is the point of that? When price goes above a high, it activates buy stops or sell stop liquidity. And when the sell stop or buy stop liquidity, they tend to retrace so they can take out those retail traders that had a buy stop liquidity. And this is where also they trap break and retest traders. You get what I'm saying? So pretty much this is a retracement over here, right? Is that an entry right there? That could have been an entry, right? On the 30-minute time frame, if you were gonna enter off this imbalance, your take profit, right? Your take profit would have been, your stop loss would have been here, right? At the high of this candle. You know what I'm saying? Or the low of this candle. But me, this is how I like doing this. If I see a 30-minute time frame setup, a 1 hour time frame setup, I go to 3 minute time frame, a 5 minute time frame, 1 minute time frame, or below, and I will get it set up here. So now let's go to the 1 minute time frame. Let's go over here real quick, right? So as we all can see, right? Let me just delete this real quick. Mind you guys, this is a 30-minute imbalance, this box. But I'm just gonna keep it there. So in this whole fractal, we're gonna pay attention from in this high, this high, my bad, this low over here, and this low. Point A, point B, and point C. Right? So you got a double bottom on the M1 time frame. Okay? And this is how I take my trades. This is how I'm precise with my entries, and this is how I get low risk, high risk to rewards, basically risking barely any pips, right? So we have a double bottom here, right? Double bottom. And as we all can see, this is the most, pay attention here. This is the most recent high, right? That came into this imbalance here, okay? Price came to this imbalance and filled that 30-minute imbalance in, and this is the most recent high. After we filled that imbalance in, guess what the price did? Price on the 1 minute time frame, as we all can see, this is a very, very nice price action. So we basically got very strong candles going up, basically breaking structure on the M1 time frame, right? Because this is the most recent high before the fill in, the imbalance, like I said, or the mitigation of the order block. And I've been saying this a lot in the course, so if you know, you know, right? There's the most recent high, and now that's a break of structure on the M1 time frame. So now, where are you going to look to enter, right? How can you take advantage of these entries? So, all right, cool. There's a lot of ways, right? After the break of structure, as long as you have the components on the higher time frame, right? 30-minute imbalance, 1 hour breaker block, and then the 1 hour break of structure. Those are your main three components in this trade. And also looking at the market structure, we never went below this low. So why are you bearish? So you have 4 components on the higher time frame. Now you're just building more on the M1 time frame so you can get a better entry. It's the same thing that you need, same steps that you need to go over. So basically, once you get this breaker structure, right, there's multiple ways. You can use the Fibonacci, right? Swing low to swing high. This will be your entry here, right? Entry right here. Stop loss at this low. And you can use the Fibonacci, to use for your take profits. Or, we're gonna look left soon, but you guys get the point, right? This could be your take profits right here. Nice low target right there. Or another entry point is using the imbalance from this candle's low to this candle's high and this candle's low, right? And let me bring out the Fibonacci. 50%, right? 50% of this imbalance right there, you could do that. Stop loss at the low. Or also a very nice way to go about your day entering these trades, if you guys look at the 3-minute higher time frames. So on the M1 time frame, you already got to break a structure. You got to stick with that bias. So on a 3-minute time frame, as we all can see, 3-minute, the last down close candle, and the next 3-minute candle over here, you got the mitigation down to fill in, and then after that you got the nice expansion up. So this 3-minute candle closed way above this candle's high over here, Now that this turned into an order block, right? This turned into an order block, and now you could use this candle's body, get your Fibonacci out with the 50% threshold. So you could have either entered at the open of that candle, stop loss at the low, or the body, right? Or enter at the 50% at the low. But how I do it, right? How I like entering, I just like entering here. I don't mind a little drawdown. You get what I'm saying? That's why I always enter with a 0.10 lot size first on indices, and after that, when I see market really giving me that price action, I re-enter again with a higher, with a higher lot, and that's how I go about my day on indices. And pretty much, as we all can see, order block again over here, mitigated the order block, and then another one on the 3-minute time frame. As we all can see, price, this candle closed above this down close candle. After that, price expanded up on a 1 minute. Whoa, what the freak? Okay, let me go back. Let me go back. Okay, so basically price expanded up on a 3-minute time frame. Basically, and after that, right? Basically mitigated this candle's opening price over here, down close candle. So you all can see we played around there for a couple minutes, for 6 minutes, and then that's when price started rallying up over here, right? And there's multiple entries over here, guys. It's way too many entries in this fractal. Basically, so there's one entry here, right, at the fill-in. This is your second entry. This is your third entry over here, right? And now that's the breaker block entry. And now you got another entry over here, this higher time frame breaker block besides the 1 minute. So over here as well, this is right here a breaker block. As we all can see, candles high over here, candles low. This will be another entry. As we all can see, the body that those candles right there, down close candles, followed up by a consecutive up close candle over here. As we all can see, this candle filled in the imbalance and also mitigated the opening of this down close candle, and that would have been an entry right there. Where would your stop loss be? At this candle's low, not this candle's low, this candle's low, right? And now that's the whole entry points over there, and that's how you're gonna be able to enter off of imbalance, breaker blocks. And as we all can see, I just broke down how you can simplify your trading just by knowing the higher time frame components. Instead of using a very, very big stop loss on indices, you can actually turn them a lot down into, because like if you entered here per se, stop loss here, that's 20 points. And my initial target, right? My initial target for NAS was over here, right? Over here at this imbalance. This was the main objective that I wanted for NAS. Since we already went above this high, I was like, all right, cool. That's just the objective I got over there. And that would have been a 5-to-1 risk to reward ratio. And now I think that even matches with the Fibonacci. Let's see. It doesn't, but that's pretty much how you guys could take advantage of breaker block entries on a higher time frame. And see, as y'all can see, I showed you guys the breaker block on a 1 hour entry. That would have been an entry for you guys. 30-minute time frame imbalance, another entry. And I went to M5 3 minute and M1. So depending on what type of trader you are, you could definitely freaking trade this. But of course, like, going down to 3 minute and 1 minute time frame takes a lot of work, more work than usual. But who doesn't like a nice risk to reward ratio? You know what I'm saying? So, um, the same thing that complies into higher time frame complies into 1 minute as well. 3 minute time frame, 5 minute time frame, same shit. Um, Again, first entry is here, right? Second entry is here. Third entry is here, right? And fourth entry is here. And again, this setup on the M1 time frame is even a signature, right? If you go look on the imbalance entry, order block, all the trade breakdowns, you guys are gonna see this type of entry points here. You got the imbalance order block trade. This is what I call order block trade. So we all can see even on the M1 over here, we have an order block down close over here, but it's coupled with the imbalance. So we got the order block trade over here, right? Basically, the first entry, because we basically swept below the sell side liquidity, right? First entry is here, right? After you wait for the break of structure, retracement, this is your second entry at the imbalance. Your imbalance is your second entry. And the third entry is when price goes above this recent high, right? The high that broke structure. So now, price is already showing willingness to go up. Okay, cool. All you really want to see is nice candle prints, right? Like this. Body can't, like, you want to see bodies of the candles going above these highs. You don't want to see wicks going above these highs. You want to see a full body of candles like this. And after that, so we all can see, price, played around this breaker block. Now this is a breaker block. We went above that high. That's a breaker structure. Retraced over here, right? Price retraced at the body of this candle. And price started rallying. Now look, isn't this the same concept over here? Right? Isn't it the same concept? Right? Because if I broke it down like this over here, sorry, we're getting very deep, and I'm liking this right now because I want you guys to learn. So over here, right? That low, we swept that, right? And how can we validate that? We didn't go below any of these lows. This is not a break structure at all. So you got a imbalance over here with an order block, right? Couple with an order block. Okay, this would have been your order block entry, right? You got that expansion up. You went above all of these recent highs, right? You got the retracement back down, right? Price action, it wasn't as very clean on here, but same moves applies, right? You got the retracement down here, even though it's not as clean. That's why you don't trade here. You wait, right? And after you get the reversal going up, right? You got the expansion going up. You got the breaker structure. What comes after the breaker structure? If there's a block like this, breaker block, boom, right? This is your first entry, second entry, third entry. Now let's go down to the 1 minute over here, right? First entry, second entry, third entry. Make sense? Same thing applies. Same thing applies. So that's pretty much it for, this video. And I hope you guys learned. This will be on the course, and also this video will be on my YouTube channel, right? Since Discord isn't really, accept a lot of, you get what I'm saying, like a lot of gigabytes or MBs or megabytes. So I am just going to upload this on YouTube. You know what I'm saying, and also the course. And thank you guys so much for tuning in for that long. Um, if you guys like listening to me, you know what I'm saying, always feel free to watch any of my content. Um, Quick thing as well, I have 5 more spots, right? So if you guys know, Seven Source Academy launch, I have 5 more spots. I have 5 more spots for the in-person class, right? So if you are looking to cop the platinum package one time free, this is what you are going to get over here. The Forex packages, they are made for your lifestyle, right? If you only want to pay 75 a month, um, in the course of 1 year, you're open to get those 75 a month. I made that very cheap. And pretty much the gold package, you are eligible to upgrade to platinum package after the first 6 months. And basically, your sixth to seventh month, that is your option. Basically, that's your decision month if you want to pay the rest to go platinum, right? Basically, the difference of, okay, 75 times 6 is 450. So you only have to pay $300, right, at one time to go platinum after 6 months. Okay, and that's what we're basically doing. And the platinum package is one time fee. So if you don't want to pay those monthly packages, you just want to pay the platinum package as soon as possible, just get that right here, and you are going to be eligible for the in-person class. And if you guys want the car rentals, I've been going ham in the car rentals, so y'all can see on my tabs. Buying all of these cars, and then credit as well, and bundled with my Forex Mentorship Academy. So check this out, right? Just check this out, and see you guys on the Discord, especially all of my beautiful people in the VIP. Thank you guys for supporting, showing love every single fucking day. I love y'all. See you all on the next one. Peace out.